And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, this week begins earnings week as Friday. We'll have a couple of earnings announcements this week. I think Procter & Gamble on like Wednesday. But Friday, the major banks kick off what we consider the start of earnings season. The following week, we're going to get a lot of earnings reports coming in. The week after that, it's all the big tech. And then pretty much we're done. It just kind of all happens at once. And a big climactic end as we get towards the end of October. And of course, that's also when buybacks start to come back in early November. And then, of course, we're going to wind up with the election on November the 5th. So it's about to get real busy for the markets here over the next month or so. And particularly as we head into the next Federal Reserve meeting in November. So the next FOMC meeting will be right around the election. So, we've got a lot of stuff coming up. And speaking of that, let's talk a little bit about that employment report on Friday, which came in a lot stronger than expected. Estimates were for 150,000 jobs. It came in at 245. So, just completely kind of blew the numbers off the door. Extremely strong. So, headlines are 245 on the employment front. Clearly no signs of a recession. A couple of interesting, though, kind of aspects in that. First of all, we did see the labor force participation rate pick up a smidge. The unemployment rate came down rather sharply, came down from to 4.1%. But what was interesting is that the wages increased because we cut the number of hours we're working every week. So the number of hours worked every week came down, which brought wages up. So overall, it was a very, very strong report until, of course, you get kind of underneath the surface of all this. And again, massive hiring in private education, leisure and hospitality, and government workers. So we hired 700,000 government workers. I don't know where they all came from or what we hired them for, but a lot of those were teachers going back to school, obviously. But just a massive surge in those jobs. That was really the bulk of the employment report. Now, what that suggests is a couple of things. First of all, those are lower wage-paying jobs. So again, that's not hugely supportive to a strongly growing economy. The economy is going to continue to grow stronger. We are hiring in areas like leisure and hospitality, recreation, et cetera, because we're a lot of services-driven economy, and that's where those jobs are clustered. Those are lower wage-paying jobs, so that's going to bring down the average growth rate of wages, as we kind of go forward. One of the negatives to the report is that we had one of the lowest response rates on record for the employment report. Now, remember, the employment report is a statistical sample. So we basically survey about 60,000 people in households. And from that, we extrapolate that data to cover the 330 million Americans, right? So it's a small sample relative to the total population, but when you're doing statistical analysis, that's okay. You can use a relatively small sample to cover a large population as long as you have a very good, reliable set of data on that smaller set of that small population that you're using for your large sample. Problem is the number of responses to those survey questions are dropping. So in other words, while we may survey 60,000 people as an example, you're only getting responses from about 60% of those. So your actual sample size is becoming a lot smaller, which makes the outcome for the larger population much less reliable because you have less of a smaller sample size. What that suggests is that we're likely going to see some pretty big negative revisions to this number at some point down the road. But again, markets don't care about revisions, but that sampling size and that response rate to the employment report is important to kind of keep a watch on. So, but it will be interesting. But on the headline surface, clearly nothing wrong with the economy, no recession on the horizon at the moment. Economy's doing just fine. But we'll see kind of what happens from here. Most important thing, but that's for later, right? Over the next month, it's going to be earnings and the election that are driving the markets. Speaking of that, let's talk about what you need to know before the bell this morning. S&P rallied nicely on Friday on that employment report, right? So very strong employment report. Surprised to see the market rally as strong as it did, because it pretty much eliminated the possibility of any Fed rate hike of 50 basis points in November. We're now down to probably, rate cut. We're probably talking about a 25 basis point rate cut in November, but really, honestly, if I'm the Fed and I have employment that strong, I wouldn't cut rates at all. We'll see what happens, but I think there's a risk the market might be surprised come November. They could just sit tight and go, well, we just cut 50, let's kind of wait and see. But we'll see what happens. Markets are expecting a 25 basis point cut. Markets rallied back towards the top of this consolidation range. And again, this is where we are. Again, markets participated very nicely on Friday this morning. Futures are pointing lower by about 34, 35 points. So again, we're going to kind of give up a big chunk of those Friday gains, at least at the opening bell this morning. But again, we're just kind of in this consolidation period. And we've talked about these type of periods numerous times here on the show, is that we get into these kind of consolidation ranges, and then eventually the market kind of either breaks down or, kind of consolidates and then finally moves itself higher. The 20-day moving average is coming up. We've got support here right at the bottom of that little pullback we had last week. But again, here's another consolidation range just like this, right? Where markets just kind of trade sideways, and we finally broke down a little bit, tested the 100-day moving average, and then we kind of rose up from there. This is a repeated pattern that we see over and over and over again in the markets, and does suggest that with kind of the markets being a little bit overbought here and kind of flirting with a sell signal, that we could see a little bit of a corrective cycle here over the next, couple of weeks heading into the election. Again, markets typically this time of the year, in terms of particularly in election years, you typically get a correction just before the election. No rhyme intended. But just kind of de-risking, not really kind of understanding who's gonna get elected, what the outcome is going to be, etc. You typically get some kind of pullback here. We'll see if that happens. Markets typically rally about 4% through earnings season. We've already done most of that, so we've kind of front-loaded the earnings season rally as well. So unless earnings are just absolutely stellar and outlooks are strong, we may have actually kind of front-loaded some of that earnings season here. So we could continue to see potentially a little bit more choppiness here and potentially a little bit of a correction here before the election. Then once we get through the election, obviously, then we're probably going to have a year-end run into the end of the year, just as markets start to position for whoever gets elected and what the outcome looks like. Of course, one of the big risks to the markets around the election is a contested election. In other words, we have the election, but we don't have a clear winner for one reason or the other, and the thing gets contested and drug out, which is potential. That could also kind of weigh on markets. So with the kind of the takeaway here is, at least for now, be a little bit more cautious. Just be kind of a little, don't take on a whole lot of risk here. And again, we'll kind of talk about some more technicals this morning on the show. But this, we're kind of elevated, kind of pushing, higher levels in the markets. And so again, doesn't mean to be bearish here. This isn't a time to de-risk your portfolio a lot, because the markets are doing just fine. But again, maybe not be overly aggressive here. We'll, just kind of play this kind of day by day. We'll keep you updated here in the mornings as we do the morning update. But again, there's not a real clear signal, either bullish or bearish right now. So just kind of maintain a more even keel, but just manage the risk in the portfolio. A little bit of extra cash right now certainly would not be a bad idea. All right, that's what you need to know before the bell this morning. When we come back, we're going to talk a little bit about technical analysis. 3 bullish, 3 bearish takes on the markets as we get ready to head in the end of the year. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners. to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So we're talking a little bit about technical analysis. This weekend's newsletter, which is on the website at realinvestmentadvice.com right now, kind of goes through 3 bullish and 3 bearish setups and for the markets heading into year end. So I'm gonna, we'll just, if you're driving to work this morning, don't worry, I'm going to explain it. You'll get the gist of it, and then of course when you get home later, you can either watch the YouTube channel or basically go to the website realinvestmentadvice.com. You can also catch it over at Lance Roberts on Substack. It's there. Twitter, it's on there. So I mean, pretty much anywhere you scroll, you're going to find our information. So, but while you're doing that, make sure and hit the like button this morning. Brent, I need you to make a button that says hit the button. You just get a sound effect that says hit the button. Do it now. Push the button. Anyway, so I want to bring up this chart real quick because I think technical analysis is super easy. And again, it's just I've done it for a while, so it makes complete sense to me. So, when you see a chart, like this, this should be very, very clear as to kind of what's happening in the markets, and Brent's going to bring this chart up. So clearly, you can just very easily tell that, with just, a few thousand different squiggles and lines that, exactly what the market is going to do. This is not technical analysis. This is actually a live technical analysis chart that somebody put out a few years back. And I use this kind of as a joke when it comes to technical analysis because there's so many lines and things and everything else that you can't really tell anything that's going on. That's, to me, and again, there are people that do this type of analysis as a profession, and they are super technical. They look at everything and they have 1,000 different indicators that they use. For me, that doesn't work. That's just, for me, it doesn't work. It doesn't mean it doesn't work for them. It may work great for them, right? But for me, it doesn't work because it leads me to have paralysis by analysis. In other words, there's just too much data coming at me all at once, and I can't sort out where the market's trying to head to next. So for us, and again, I want to be really clear about this because I don't want a bunch of emails from people saying, well, you did this wrong or you did it this way and I don't agree with you and blah, blah, blah. That's okay, right? That's the whole thing about technical analysis. It's just analysis of price. And everybody has a different way of doing it. I am not a technical analyst by trade, right? I have learned the basics of technical analysis through needing to do it because of the market that we live in today. Fundamentals are no longer a primary driver of markets. It is all about liquidity and flows and supply and demand. That's what's driving prices today. So as such, I kind of have been forced to learn technical analysis to a degree. So my caveat to this, and I even have a disclaimer in the newsletter. It says, this is how we do it. We use very simplistic technical analysis. That's it. If you want to do more complicated stuff, that's all on you, right? And that's fine. And again, there's nothing wrong with it. It's just, this is how we do it to help manage our portfolio better. Because all we're trying to do is figure out when to put capital to work and when to take it off the table. That's it. I'm not trying to day trade. I'm not trying to, swing trade, positions in the portfolio. That's not what we do. We're long-term investors. We're trying to buy investments that we can hold for the long term, collect dividends on, but manage the risk against more catastrophic losses. I have an article coming out not this coming Tuesday, but the following Tuesday, talking about a guy that he was a guy born in Canada. He turned $88,000 into $415 million trading options on Tesla. Lost it all. There's no reason for that. Just a smidge of risk management would have saved him, would have at least allowed him to keep $100 million, right? Go $88,000 to $100 million. I know that's kind of left pocket change for a lot of people, but $88,000 to $100 million, isn't bad. Yeah, you didn't get the $400 million, but that's greed, right? And that's the whole subject of this article that's coming up on greed. And so we'll get into that when we get there. But managing risk is what allows you to hold a position for a long time and generate returns that will benefit your wealth. So we're going to go through 3 bullish charts first, and then we'll do 3 bearish ones. And we'll just kind of, over the next couple of segments, we'll kind of try to come to a conclusion about what the market's most likely to do. So the first thing is just one thing we look at is for breakouts. Now, a breakout is when the market has reached a level of resistance. And it doesn't, and in this case, it happens to be all-time highs, but it can just be a level, you're recovering from a previous sell-off and you get to a level of resistance and then you kind of consolidate, you pull back some, and then you break out above that. So breakouts are just when prices break out of a previous level or break above a previous level that was stopping them from going higher. In this case, we're talking about the previous highs in July. The market had rallied strongly. We got into early July. The market peaked, and then we sold off in July and through August. Of course, in August, we had the yen carry trade blow up. And so just recently, the markets have now rallied out of that and broke to an all-time high. Now, for what I look for in a breakout, now a lot of people will immediately say, okay, market broke out, buy it. I'm not that quick on the trigger. What I want to see is what we call a confirmation of that breakout. What I want to see is the market rally above that breakout level, then pull back and retest that previous level, and then hold that level, and then move higher. And that happened last week. We had rallied above that breakout level 2 weeks ago. Last week, we had that one day where the market sold off pretty sharply. We're down over a percentage point that day. We kind of drifted down on Tuesday sold off. Wednesday and Thursday, markets kind of sold off a little bit more, retested that previous July high a couple of times. And of course, on Friday, we had this big update because of the employment number. Now, we don't have a confirmation yet. The way I look at it, we don't have a confirmation just yet. What I would like to see happen to confirm we have this breakout, and that, because I've seen this happen before where markets look like they break out and then they fail. More often than not, if the market can retest the previous breakout, make a new high, make a new all-time high, that's a good confirmation. Markets tend to move higher from there. We haven't set the new high yet. This morning, we're not going to either, unless we have a big turnaround midday and then the markets rally to all-time highs. Today, we're not. So we haven't quite confirmed. We've had a good successful retest of that previous breakout level, but we haven't broke out to the new high yet. So we need to still be a little bit cautious here. But it is bullish. Breakouts are bullish. It tends to support the idea of continued rises in asset prices because there's a lot of bullish sentiment behind the markets. So the second chart that we looked at was what we've talked about here previously, and it's called what's called a cup and handle pattern. Now, this is a little bit more, complex technical piece of technical analysis. But what a cup and handle is where you have essentially a market sell-off, and then the market recovers back to where it was and then sells off again, but it sets a higher low, and then you break out to all-time highs. Or you break out to new highs, not all-time highs, just break out to new highs from that pattern. So that it looks like a cup and a handle is what you have: a deep sell-off, a little bit of a sell-off, so that's the cup and the handle, and then you kind of move up from there, and that's typically the completion of the cup and handle. We have just done that. Going back to July, that cup and handle pattern, rising lows, we had this kind of two sets of highs that were right in line with each other. Then you broke out from that. You completed that cup and handle. Now, historically, what that suggests is that should get you a move higher in the markets. And the target for that move is essentially a Fibonacci retracement. Don't worry about that part. It's just basically an extension of the markets. It says that the market should reach around 6,000 by year end if this cup and handle pattern holds. Again, these are just patterns. These don't have to have these. There are times these things fail for one reason or the other. But historically, when we have these type of patterns, they're very bullish. The rising lows are bullish. The rising trend is bullish. The moving averages are all moving higher. That's bullish. This all suggests that price action, right, is all moving higher. Now, there's definitely some bearish stuff going on, and we're going to get to that in a minute, and it's certainly not stuff worth dismissing. But on the bullish side of the ledger, this is a very bullish pattern that suggests markets are going to move higher into year end. The last one is really kind of a knock-on onto the cup and handle pattern, which is this ascending wedge that the markets have been in. And basically, this is just the same analysis in a different form, but you just have a very sharply rising set of higher lows, and you have higher highs. So again, the market is trying to move higher, and the area, the breadth between the highs and the lows is getting more narrow. So you're compressing price on this move higher. So if the market can break out to new highs, we're also going to break out of this wedge pattern that's kind of like a coiled spring. It's kind of coiling the prices in, and that should allow the markets to move higher if the markets can break out from here. Now, that's all the bullish stuff. When we come back, we're going to talk about the bearish analysis that has a lot to do with what the markets might do next. So don't go away. We'll get to that part of it right after the break. And hit the like button now.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources services, and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
A new study has come out showing that people who take their coffee black are more likely to exhibit psychopathic traits, and people who order a quad shot, non-fat, vanilla soy, extra foam light whip with caramel drizzle are more likely to be their victims.
The Real Investment Show podcast.
I think it's all the same bag of coffee that they just put in different K-cups and labels because it all tastes the same.
Same show, your schedule.
And I think people that go, oh yeah, I can tell the difference between coffees, I think you're completely full of BS.
At realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Just real quick, before we get back to our technical analysis, lots of headlines out this morning that today marks the 1-year anniversary of the Hamas attack on Israel. My point about that is I can't believe it's been a year. It has gone by so fast. I didn't even realize today was October the 7th already. I just want to know where my year went. Can I have some of it back? I know a lot of it went to remodeling that stupid house, but geez.
Some parts of the year, you can just have them. I don't want that back.
I know, right? I just don't know where it went. Time just goes by so quick. Anyway, so we talked about 3 kind of bullish technical formations in the markets. And again, don't worry if you're driving your car to work this morning, listen to the radio show. I appreciate you. When you get to work or home or wherever, go to the website and just go to the Insights tab at the top, click on newsletter, and you can see all the charts yourself. And I explain each one what they mean. What we're trying to figure out is what this market's going to do next, right? So my job is, and Michael's job and Nick's job here at our firm is to basically try to avoid big downturns in the markets, right? We want to participate on the upside as much as possible and try to avoid big drawdowns. Now, look, we're not trying to avoid a daily dip, right? If the market's down, 0.5% today, I'm not trying to avoid that. What I'm trying to avoid is a 10 or a 20% drawdown. That's what I'm trying to avoid. And from that standpoint, we have to use some technical analysis to tell us kind of what the market is thinking it wants to do next. And again, because all technical analysis is just reviewing the overall psychology of the market. That's it, right? The market's just a big living, breathing organism of a million minds trading gold futures and oil futures and wheat futures and cotton futures and stocks and options and all these other type of things. Everybody's making a bet, right? They're either betting on one side or betting on the other. That's all they're doing. And that moves price. If all buyers and sellers were just transacting and there was no, demand or supply issues relative to that, market price wouldn't change. It would just stay flat every day. And it wouldn't be a very exciting market, and this would be a really boring show. So technical analysis should be part of your routine of managing your own portfolio. And if you don't want to do that, hire somebody who can. Right. But you should include that in your overall analysis to help you mitigate some of the risk in the portfolio. So we talked about 3 bullish setups. Let's talk about 3 bearish ones. If we look at the S&P 500 on a weekly basis, relative strength is declining on this rally. So as the market is going up, relative strength is declining. What that suggests is that the buying power of the market is weakening as the market rises. And we're going to talk a little bit more about volume in a second. But the momentum of the move is slowing as the market goes up. Now, historically, negative divergences like this lead to corrective actions in the markets. If we go back and look at periods where you had negative divergences between relative strength, momentum, those type of things, which right now we have both a negative divergence in momentum as well as relative strength. And historically, that precedes corrections of some sort. So again, over the next week or 2 or 3, it's possible that we could see this market sell off a bit ahead of the election. It's something worth paying attention to. Now, again, this is weekly data. So A, it only matters where the week closes, and B, it can take longer to mature. So this, in theory, we could have negative divergences that last into next year, right? Early next year before we have a correction. We could get through November, December, have a rally, then next year have a pullback. Early next year, like January, February, have a sell-off. But negative divergences historically precede corrections, so it's worth paying attention to. Secondly, and again, talking a little bit about volume. Volume is important because volume is the amount of transactions that are occurring. And if price is determined by the number of buyers versus numbers of sellers, then volume dictates how much activity is occurring around a certain price. And if there's not a lot of buying and selling going on at a certain price, then that can give you some indication about the demand versus the supply of stocks, right? And so right now we have a market that is rallying and volume is declining, right? So the volume at higher price, as the markets move up, and since we kind of broke out of those recent highs, the volume of transactions has been declining. So it just suggests that there are fewer players willing to step in at these levels. And again, it's not an absolute guarantee by any stretch of the imagination. But in a market that's rising strongly, you would want to see an increase in volume. And we're not really seeing that right now. So again, it's not an absolute guarantee. It's like, oh my gosh, market's about to crash. That's not what that means. But it does suggest that markets may struggle to move higher from here because of that lack of volume, right? That lack of demand from buyers versus sellers. We talked about this morning that the moving average convergence divergence, this is looking at the spread between moving averages on the markets. Now, a moving average is nothing but the average price over the last certain number of days. So the 50-day moving average is just simply what is the average price over the last 50 days as of today. And then tomorrow, you'll look at 50 days and lose the one day you counted at the very beginning, day one of today's 50 days. That will drop off, and then you will add one day tomorrow and look at that point. So all it does is represent what is today's average of the last 50 days. Now, moving averages act like gravity. And when moving averages start to either converge or diverge, one of the two, it can give you some hints as to the momentum of the underlying market. If the markets are rising pretty rapidly and there's a lot of momentum, the short-term moving averages are going to go up faster than the longer-term moving average, so they're going to diverge. If momentum is slowing, then those moving averages are going to start to converge, right? Which is a bit more bearish. And so this is how we can generate buys and sells off a moving average convergence divergence indicator. It's called a MACD. You'll hear that term kind of thrown around a lot. So, but when those two moving averages are converging, they're getting closer together, it will trigger a sell signal. And that typically suggests that prices are going to have a hard time rising from here. And that's kind of where we are right now. So we do have a short-term crossover as of Friday. It's right on the cusp of it, so it's very early. I wouldn't put a lot of weight on it right now. But if the market does sell off today, as an example, we're going to start, working on broadening that signal. And when that signal broadens decently, it usually precedes a corrective cycle within the overall market. And again, that's not 10 or 20%. I'm not talking about that, but it's, that's where you get your 2, 3, 4, 5% corrections. Markets get oversold, and then you kind of get your next buy signal. But we do have a short-term kind of concern right now because momentum is slowing, and that's why you're getting this convergence of moving averages in the markets. So again, what does that mean? Right, so we went through 3 bullish and 3 bearish indicators, and this is the challenge, right? So it's easy to say, well, you got these bullish indicators that are there, so I should get more defensive. But yeah, you got 3 bullish ones as well, and this is the challenge, right? This is where we talk about psychology. And this is where investors make their mistakes. Now, the reason I went through 3 bullish and 3 bearish ones is because historically what people do is they'll only look at the I'm bearish, and so I'm only going to look at bearish charts, right? So I confirm my bias by only looking at bearish indicators or bearish analysis, and there's a lot of it out there. Or I'm extremely bullish. I think the markets are just going to go higher from here, so I'm only going to look at bullish indicators, right? I'm going to ignore the other ones. To be a good investor, you have to set aside the emotional part of this and go, I'm not bullish or bearish. I just want to know what's going on and look at the data across the board. Now, we've got 3 bullish and 3 bearish indicators. What do we make out of that? Well, we have mixed signals. We have, in the short term, we've got some bearish indicators, and in the short term, we've also got some bullish ones. So how do now I don't know what to do. I get that, right? That's the big challenge. In our view, right now, the bias is to the upside. The bullish indicators kind of overweigh to some degree, particularly with the recent breakout. And if this breakout can confirm by making a new high, then that's going to further confirm the bullish upside. But we marry those bullish indicators with the fact that we're about to go into earnings season, which typically is positive. Also, you've got stock buybacks coming in at the end of the month. That's going to be positive. So there's some things that should help the bullish case. But because of that bearish weight, there's some actions we should be taking. And we'll talk about those right after the break, but only if you hit that like button on the break. Otherwise, I'm just going to come back and we're just going to stare at each other for the next segment. Just like this right now. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right. Thanks for hitting the like button on the break. I do appreciate it very much. So that means I don't have to stare at you for the next 12 and a half minutes. We'll actually talk about stuff. So as we were going through, so we've gone through 3 bullish setups. We've gone through 3 bearish setups technically. And again, you may not agree with the way I do technical analysis. That's completely okay. Everybody does it differently. I don't do really sophisticated, complicated analysis, right? I understand the Elliott wave analysis. I understand, candlestick charting. I understand all these things. I have a very cursory education in these things. And again, you can get very complex with technical analysis. It can go very deep. I find what I try to find are things that just work for me. That's it. I just try to find analysis that works for me and things that I can implement and things that can help me manage my portfolio better. That's all I'm trying to do. So again, if you disagree with anything I'm saying here about technical analysis and you're kind of in the weeds with it, more power to you. I will defer to your analysis, right? I'm just telling you what works for me. So we went through 3 bullish and 3 bearish setups, and that kind of is confusing, right? It's like, well, Lance, you just said this is bullish, but this is bearish. And actually some of the indicators are both bullish and bearish by themselves, right? Like the rising wedge pattern, if you break out to the bottom, that's bearish. So what do you do with that, right? Well, again, this is now where we've got to step back and we have to look at the environment surrounding the markets and go, look, this is about liquidity. It's about momentum. It's about, kind of attitude in the markets. It's about buybacks. It's about earnings. It's about flows. Those are all very supportive of the markets right now. The economic data is supportive of the markets right now. The Fed cutting rates is supportive of the markets right now. So likely if we do have a correction, it won't be a deep correction. There's no real sign of a recession on the horizon just yet. So that should mitigate downside risk to the portfolio near term. But there's certainly things that can happen that could change that. Tomorrow, something could happen. Don't know what that would be, but that something could happen, right? We have another yen carry trade blow up overnight. Tomorrow we wake up and the market's down 3%. That can certainly happen, right? We can't ignore that. So when we're at these points in the markets to where they're overbought, they're extended, They're still bullish, but there's some bearish undertones developing that says, hey, there could be some risk up there. Volatility's been rising as a good example while the market's been going up, right? That's another one of those negative divergences that typically tells you there's some underlying stress in the market. So, this is where we go back to our gardening, right? Just, our portfolio is our garden. And as good gardeners, we need to take care of our garden. If we just, as we talked about before, if I just plant a garden and leave it, don't touch it, I won't have a garden in a few months, right? The weeds will just take it over and kill everything. So I've got to regularly go out and tend the garden, right? I've got to pull weeds, I've got to water it. And then most importantly, it's great that I grew a garden of tomatoes, but if I never go out and pick the tomatoes, they'll just rot on the vine. So what did I get out of it? I got nothing, right? And a garden is just a great example of your portfolio because you have to fertilize it, add money to it, right? You got to water it and fertilize it. So that's adding money, right? We're going to put money into our portfolio. We're going to save on a regular basis. That should always be the case. And the first thing I do with that money is I put it in cash. I don't have to invest it just because I put money. I get this question all the time. It's like, well, I'm going to make my contribution to IRA. Where should I put it? Cash. That's just water. I don't, when I water my garden, I don't immediately start, doing stuff, other stuff to the garden because I just watered it. I just added water to the garden. That's it. So that just goes into money market cash. Now, when I find an opportunity of something, then, I say, oh, hey, here's a plant, I'm going to add some cucumbers to my tomato garden, right? So I can make a Greek salad. So now I plant some cucumbers after I watered, right? So that's, if I find an opportunity, I can put that cash to work, but just cash. It's just the water and the fertilizer for the garden. I've got to weed it regularly. I've got to make sure the weeds stay out of the garden because the weeds are vicious. They will just take over everything and they'll choke off all your plants. And by the way, I am a terrible gardener, so just don't take my gardening advice. I'm just using this as an example. It's a metaphor. But you got to pull the weeds, right? So that's sell the losers, right? If you have something that's not working in this environment where everything is going up at the same time, it's not going to work when the market goes down. That's a weed you need to pull out of the garden. And look, you may love the stock, you may love the company, you may love what they do. It's not working for some reason that you just don't know. Fundamental, technical, whatever it is, there's some reason it's not working. Just sell it. Doesn't mean you can't come back to it later. You can't replant that seed in the garden later, but right now it's not working. Just sell it, raise some more cash, leave it alone for now, and move on with the stuff that is working. Don't forget to, and again, don't forget to harvest, right? If you've got something that's working very well, take a little bit of profit. You don't win by never taking profits and realizing gains. And it's just like, again, with the garden, if I grow some beautiful tomatoes and I never harvest them, they'll simply just rot on the vine. So what did I get out of it? And again, this goes back to the story that I'm writing about for a couple of weeks from now about the guy that turned, 88,000 to 415 million. He never took profits and lost it all. And that happens all the time in markets. I don't want to pay taxes. Well, you don't have to pay taxes when you lose all your money. Right? Happens all the time. So don't forget to take profits. But these are just things to be aware of. Look, and a freeze is coming, right? We know that we're about to get into winter and we're going to have freezes this winter. So you got to go out and you got to cover your vegetables. That's hedging, right? So hedge your portfolio. Look, if you don't know how to hedge a portfolio by, using, out of the money put options or whatever it is, just raise cash. Cash is a fantastic hedge for your portfolio. It will mitigate volatility. It will preserve your capital until you can figure out what else you want to do with your money, right? You don't have to do, when you talk about, hedging, everybody thinks about these really complicated strategies. I've got to do calendar ratio spreads with options and all this other stuff. No, you just raise some cash. Hedge your portfolio. Buy a non-correlated asset, buy some treasuries. Whatever, just reduce the amount of exposure you have to the equity market, and that will hedge your portfolio in and of by itself. Now, if you want to get more complicated with your hedging and, short the market against your, against your portfolio, et cetera. That's all on you, but you don't have to get that complicated. Now, also, too, remember that none of this says you have to go out into your garden and yank every plant you have out of the garden by the roots, right? In other words, you don't have to sell everything and go to cash. Nothing in this says that. Just a regular process of gardening, right? You don't, if you're growing a tomato garden, you don't go rip them out of the ground when you harvest your tomatoes, right? You just pull the tomatoes off the vine and you let the new tomatoes grow in its place, down the road. If you rip everything out by the roots, you're not going to pretty much have any tomatoes after that. So that is just kind of the process right now that we're taking, and with our portfolios, is just beginning that gardening process. Because again, the technical analysis is uncertain. The outlook is a bit uncertain over the next month. So being a little bit cautious here certainly doesn't hurt. Now, that doesn't mean be overly cautious and be bearish, right? It just means be a little bit cautious. Speaking of gardening, my wife and I have been watching this show on Amazon Prime called Clarkson's Farm. Did I talk about this already? Have I told you about this? This is the funniest show on the planet. Jeremy Clarkson, who used to be the host for Top Gear, spent years traveling around the world and driving fast cars and doing a show called Top Gear and was very famous for that. It's a British guy. If you don't know who Jeremy Clarkson is, look up Top Gear. He had a very neat gig as this host of Top Gear, driving Bugattis and Ferraris and everything else. Well, he's retired from that, and he now owns a farm in the UK and knows nothing about farming. And there's 3 seasons on Amazon Prime called Clarkson's Farm. And by the way, the soundtrack is awesome if you love 70s and 80s music. Great soundtrack. But he is farming his own farm with his girlfriend Lisa and a couple of other buddies, and everything that could possibly goes wrong goes wrong. And and the best part about it is that he has all these great ideas about how to make money off the farm. And he's got a guy named Charlie that shows up and says, you can't do that because there's some government regulation. Every time he has an idea, it's like, well, you can't do that. You've got to get a license. You've got to get a permit. You can't do this because of some regulation. And it's freaking hysterical. So if you want a good laugh, just watch Clarkson's Farm. If you haven't seen it on Amazon Prime, it's well worth the price of admission for having an Amazon account. But again, it's the story of him learning how to farm and all the things that goes wrong. And of course, him trying to sell his knockoff candle. Of course, remember Gwyneth Paltrow sold her famous candle. Yeah, he has this candle smells like my buttocks that he's trying to sell. So anyway, it's on Amazon Prime. Highly recommend it. It's actually hysterical. All right. Thank you so much for tuning in today. We appreciate it very much. Be sure and like and subscribe to the channel. And also send us any questions, comments, emails you have. If you want to see those charts that we talked about today, go to the website, realinvestmentadvice.com, click on the newsletter link under the Insights tab. All the charts are there for you with a deeper explanation of what's going on. If you haven't subscribed to the newsletter, I certainly encourage you to do that. It comes out every Saturday. Keep you up to date with all the market technicals, analysis, statistics, and more. It's all at the website, realinvestmentadvice.com. Have a great day.